The Do This podcast is part of the Win, Make, Give podcast network. Join hosts Bob Stewart and Chad Hyams as they explore the synergy between real estate and mortgage services with guest Scott Goodnight of Colorado. Scott shares his 13-year journey in the industry, discussing the importance of aligning with the right lender and building a solid partnership. Discover the benefits of a mortgage-first approach, effective scripting, and the critical role of accountability between agents and lenders. Whether a newcomer or seasoned professional, you will gain insights into structuring successful lender-agent collaborations that drive business growth. We hope you enjoy this episode of the Do This podcast, presented by Brivity.
Welcome, everybody, to another week of Just Do This. And today our guest is my friend Scott Goodnight. Scott, do me a favor. The people that join us regularly, I don't know what's wrong with you guys, by the way. But if you do, you know that Chad and I don't do bios. Scott, will you introduce yourself to the audience? Let them know a little bit about you, a little bit about your team, where you're from, how long you've been doing it. Just give me the bona fides.
Yeah. So we're in Colorado. So our real estate team, we sell all over Colorado. And then we also have a mortgage team as well with Envoy Mortgage. And been in the industry for, I think it's 13, 14 years now. And yeah, so we have, about a dozen agents on the team. We have 3 LOs, that type of stuff. So yeah, there you go.
I heard something recently that I'm like in love with. And I know your answer to this, but I heard you're like 13 years. So are you in your 13th first year, or are you like learning every year and you're now in your 13th year? Like, I assume it's the second one, but like, what have you learned maybe over a 13-year career that you like are like, I'm not going to relearn that?
Yeah, I mean, how you work with clients, the market always changes. Every single year is different. Sometimes we feel like the spring market starts a little earlier every year, where I almost, back in 2021, it was only spring market, so to speak, where it was just insane, and that kind of stuff. So every year's different. So, I mean, if we think we know how the year's going to go, we might be a little bit off. But every year we're just learning every single time how to work with buyers, how to work with clients. So there you go.
I think, Bob, I asked that question of Nicole last week. So I think we're going to just have to keep asking that. But Wiggs, don't let them know we're going to ask them that question when you talk with them to get them going. Scott, talk to a first year that's listening to this, because there are some first years listening. Now we're getting some great notes from people, right? I've been doing this. What is one of the most important lessons that you have learned that has taken you to 13 years instead of just year one again and again?
Yeah. So I think one of the most important things that I learned probably in my first year, or, my first 6 months, and it really had changed the way that we work in real estate, is I remember way back when I was working as an ISA, making cold calls for expireds and FSBOs, calling back sign calls, that type of stuff. And once I started to actually be an agent, one of the things that I would do is I would field calls from people, essentially like a Quickly call, but, we didn't have Quickly at the time. And this one
want to interrupt there, Bob, and let everyone know what Quickly is.
It's a text to lead service. If you're a Brivity partner, you're a platform user, you have it. If you don't have it deployed, shame on you. But it's a great way to just collect somebody's phone number when they're interested in my listing as they drive by it.
Exactly. So we'd get a bunch of those. Yeah, we'd get a bunch of those leads. I was calling them. I finally got a buyer that magically, keep in mind, I'm 5-6 months in the business. Somebody finally wanted to meet with me. So I was like, oh, fantastic. So I showed them this house. It was, back in the day, it was a short sale. It was, very rough around the edges, so to speak. And they didn't like that house, but I scheduled an appointment for the next couple of days. And then every week I was showing them 2 or 3 homes. And then it was almost every single day. And the one question I didn't ask them is, are you pre-qualified for a mortgage? I didn't even ask them where they worked, because I was afraid of the answer. I was just getting some positive reaction that somebody wanted to go look at a house with me. From that day on, I started to ask. So I asked them the question. I was like, oh, so what do you guys do for work? And they said, oh, well, we're in between jobs right now. Punchline is, They couldn't qualify. Why was I showing them? That point really changed my career and my process to really go from a mortgage first perspective, to ask them those questions, to be really good at scripting and that type of thing.
And how many years later was it that you launched a mortgage piece to the puzzle?
Yeah, it was, it would have been about 3 years later, right? Okay. Where we took it a direct approach. I understood how the market was and that type of stuff, but where we just kind of formulated it or made it more formal, so to speak. Yep. You got it.
I love the mortgage first concept. Like in some ways, my start, well, not in some ways, my start in real estate was in mortgage. Now I quickly kind of moved to the real estate side of the house, but my partner stayed on the mortgage side. And our idea was always back then, and you have to forgive me, I think back then we could actually get mortgage leads cheaper than we could get real estate leads. And so we were like pouring a bunch of money into mortgage leads thinking, we'll get these people pre-qualified. But there is, Scott, and I don't know how this happened. Maybe you have some insight. I feel like the general consumer out there doesn't necessarily think I need to get pre-qualified for a mortgage. They think the fun thing, which is I'm going to go look at houses, right? So yeah, like what do you guys do to get kind of on the front side of that and try to convince the consumer this is the process. This is the best process for you, the consumer, is to get approved so that we're looking at the right type of houses. Like what is that? How are you doing that? How are you educating the consumer? Because I think the general market does it the other way. And
yeah, for sure. Yeah, and that is pretty common. I do hear that a lot. So, I mean, it really starts from our scripting. So, like, if we think of a simple LP Mama script, one of the M's in there stands for mortgage. The standard, standard script around that is, hey, Bob, if we find you the right home and we want to move forward and make an offer, that type of stuff. If we want to buy it, are you going to be paying cash or are you going to be getting a loan? A lot of agents say, oh, you're going to be getting a loan. Great. Move on to next question. What is your motivation? Like, are you working with an agent? Whatever, that kind of stuff. What we ask is just a couple simple more questions. Who's your lender? You're going to be paying cash. Okay, great. Well, then we go down that path. But if you're let me ask you a quick,
when you say who's your lender, how many of them are like is it 50% or like, I don't know, is it 80%?
Yeah, I mean, that's a pretty, I would say around 50% or so, have somebody that they're talking to. So the question becomes, if they don't have somebody, we have a resource. Great. You don't have somebody in mind. Well, why don't we do this? Let's get you in touch with one of our lender partners and we can go through those steps, because the one thing that I do not want to have happen is we find a house, you fall in love with it, and then you can't qualify. So let's get ahead of this a little bit, right? Just to know if we have a couple months of time, right, that we can work on, why don't we go that direction? Make sure we could fix your credit or go through those steps to get pre-qualified. And then when we find the right house, we could just take an action, right? For the folks that are pre-approved or are talking to another bank, we start a casual conversation. Great. Who is it? Oh, it's with X, Y, and Z bank. That's fantastic. Can I gather their info? Call that lender, talk to them, go through those steps to see what they're pre-qualified for, or if they're, honestly, we're trying to see if they're telling us the truth. Right, if they're actually talking to somebody or not.
Are you so when you have somebody on the phone and you have that conversation with them and they're one of the 50% that says, yeah, we haven't even started that yet, or my dad said we should do that, but we haven't done that yet. What does that handoff to your lender look like? And maybe, look, I know today you guys run both of those sides of the business, so maybe it's a little bit smoother today than it would have been, when the lender was outside the building. But maybe just talk through like making that handoff, because to me, that is one of the most important handoffs that will happen in this whole transaction, is me having somebody that says I need a loan and I have the ability to give it to my lender and make sure something happens like immediately.
Yeah. So if I'm talking to a consumer directly, I'd say, Bob, the next step is probably getting you pre-qualified and going through those steps and see if, you're a first-time home buyer, you're a whatever time home buyer. We have those programs available with the mortgage company we work with. Let's get you in touch with them. Okay. So here's what I'm going to do. I'm going to set up a time for our lender to get in touch with you. And then from that moment, we're going to follow up and make sure you guys are on the same page, and then go through those steps to see if we need to get anything else accomplished at that time. Sound like a plan? Great. Then at that point, I three-way text the lender and the consumer and say, hey, Bob, meet Chad, our lender, right? We talked about 123 Main Street. We're going to do this. We're going to do that. We'll let you guys take it from here. And that usually, our contact rate from the lender getting in touch with the buyer that we're passing over is upwards of 80%, right? Most of that work is being done on the agent side because we're setting that proper expectation that, hey, this is the next step. You're going to talk to the lender. We're going to circle back, and then we'll have a game plan moving forward. Right. So that's how we do that. Mm-hmm.
I got a few quick questions and then one a little bit longer. You mentioned the LP Mama script. You talk about it. Because you're mortgage first, do you still LP Mama or do you MLP that, right? Do you move that question up in the order?
No, depending on what version of LP Mama you see, sometimes mortgage is last, sometimes it's first, motivation or mortgage or switch.
Yeah, but it's still in the second half of the questions.
Correct. Yeah, because if I'm getting to know you, I'm like, Chad, nice to meet you. Hey, are you pre-qualified for a mortgage? That doesn't make sense. Chad, where are you looking to buy? Right? What location are you looking at? What price point are you trying to stay under? Right? Because I don't want to spend your money. I want to give the consumer some confidence that we're looking out for their best interest because we are.
That's great.
Right?
That's a great line.
Go into that.
Everyone take that line, right? Not what price point are you looking at? What price point are you looking to stay under? It's a great, just simple little word that all of a sudden will build trust with that client as long as you then respect it and don't go show a $500,000 house to someone who just said they wanted to stay under 450 thinking, oh, we can get it down. That's a great one. Next, I think the biggest mistake lenders have made is they've allowed the industry to be run by realtors. Right? Lenders sit back and say, oh, I'm going to just work the realtors so they give me the leads. I'm not going to really go lead generate. So I think lenders are reliant on realtors. We probably have more realtors watching this than lenders, I would believe. How do I choose the right lender for me? Because I believe lenders should be reciprocal. Right. Yep. Yet I don't believe too many lenders really go out and generate leads because they become sadly lazy because they just figure the realtors will just keep bringing me people and I'll just take all these realtors to lunch and they'll keep bringing. What should I be looking for as an agent looking for the right partner to be my my lender for my clients moving forward?
Yeah, so I would think of it in a couple different ways. The first is, where am I in my business, right? If I'm brand new to real estate, who's going to be, which lender is going to take me through the process and help me understand what programs my general clientele would have, right? Is it down payment assistance? Is it jumbo? Whatever. Who's going to help me get educated? Because keep in mind, if you're a real estate agent, you're a real estate agent. Don't act like a lender. Right.
Yeah,
so
say that again. Say that again.
If you're a real estate agent, don't act like a lender. You're a real estate agent. Stay on your side of the fence. Let the pros on the lending side be the pros. And then you take care of the real estate side because you're the pro on that side, right? So that would be the first thing. If I'm newer to the industry, newer to a market, that kind of stuff, let's find a lender that makes sense to work with based off of, they're going to educate you on the market, programs, what you actually have to have as far as a credit score, like all those different types of things. The next part is if I'm trying to if I'm an established agent, one thing that I see sometimes during coaching calls when I coach people and stuff like that is they'll have 5 different lenders. Like they have 5 different people they send referrals to. Well, that's all well and good, but at the end of the day, how many referrals are you getting back from that lender, right? So Ben Kinney, he has a great script. If we're looking at a specific, ancillary service, hey, I sent you 10 buyers last year or X amount of buyers last year. And I was looking at my notes. I noticed that you didn't send me any back. How many can we plan on working with this year that are going to come directly from your side? Because I want to build this business with you, right? Let's get it moving in that direction, right? So that would be, that would be probably a catch-all for if you're new to the industry or if you're an established agent. To work with them on that side. Yep. There you go.
Okay. So are you guys like, when you explain your business to me, like, because you guys, like, you have the lending over here and the real estate side over here. How do they, they have different offices? They commingle?
No.
Stream down the hall at my lender? Like, what does this physically look like on the ground?
Yeah, we have two suites right next to each other with a hole in the wall that you can walk through. real estate is down the hall and the mortgage is on this side. So I'm on the mortgage side. But yeah, you could literally, yell down the hall. One of our lenders is right there and the other one's right there.
So you guys have your real estate database. Is your lenders in there reaching out to people and trying to like start lead gen conversations with them? Like, are your lenders proactively helping you try to convert these prospects in your database into buyers and sellers?
The short answer is yes. So depending on the agent, depending on what we're trying to accomplish, we can go a couple different ways. The primary focus, like the main thing that if the lead came directly to real estate, we want to have real estate be the first touch, because that makes sense. Because like, who's this guy? Like, you're a lender? I was trying to look at a house. Got to align that correctly and make it make sense. So, I mean, that's the primary focus. So if it came from mortgage is the first call, and then we attach real estate to it. Right, if they do not have an agent, right? On the backside with real estate agents, we do it the same way, right? So if they're looking at a house, we talk about the house first, and then we refer over using that LP Mama script. That's the most common way that we do that.
But you don't have your lenders then calling into the pond and saying, hey, these are old leads. I'm going to see if I can renew any of these, or do you?
Yes. So for past,
you're using them like ISAs almost at that point to see if they can drum up the business and stir it back up.
Yeah, targeted approaches, right? Because I mean, we have thousands and thousands of leads. So I mean, that would, we'd get lost forever. So like when rates take a little bit of a drop, right? That's a structured approach. Who has a lower rate that would be in a situation that could take advantage of a refinance, right? If it's a certain type of clientele that they have a ton of equity, we mark that in Brivity and that type of thing, where they can go for cash out refis, that kind of stuff. So we take a targeted approach. Who has a rate that is below this number during this time of year, like 2 years ago or whatever the situation is, then we have a targeted approach. Let's go touch all these past clients. Let's see if we can help them on that side. So yes, yep. But not just here's the phone book, start dialing. Right?
I feel like this is I'm asking these questions for my own benefit. If the rest of you guys are getting some value out of the questions I'm asking, that's secondary, honestly, because I'm fascinated.
Isn't that how we always do this, Bob? I mean, that's the podcast too. We don't care about anybody that's listening. We're learning stuff right now.
Scott,
there you
go. So I heard you say mortgage leads. So you guys must be doing something on the mortgage lead side. Is that right?
Yeah. So mortgage lead, we just define as a referral that came from the mortgage side that does not have an attachment, right? So, okay, we do, so we like in our business structure, so we do, it's kind of a unique situation. So like, for example, if we close 10 real estate side transactions, we'll typically close 20 mortgages, right? Because we're constantly lead generating. So if somebody doesn't have an agent, right, we will.
Hold on.
Yeah. So
you guys are closing twice as many mortgages as you are real estate transactions?
Correct. Yeah. So no matter what, if the lead comes in, the goal is to get it referred, right? Referred over to mortgage. The lead comes in regardless of source. If they already have an agent, well, that's okay. We know sometimes agents don't follow up, like wink, wink. That happens a lot. So we know that if we continue to serve them, we can refer back, right? So if we accomplish that goal of getting them over to the mortgage side, mortgage is going to kick it back in our direction to make sure the client's being taken care of if their agent fails.
Here's what I hear. Here's what I hear. I think a lot of people then, like if this is true, and I believe you, by the way, but if this is true, a lot of people are sitting on like more business for their lender than they realize.
Yes.
Right? Like they're only like in your world, you're like, we close 10 but we get 20 mortgages. If all you did was refer your buyers that need to go buy a house and are going to buy it with you, you guys might end up with 6 loans on your 10 closings. Who else then are you referring over? So you mentioned we talked to somebody, they tell us they have an agent. For you guys, that's not a dead end. For most everybody else, that would be like, okay, well, if they do crappy job, call me back or whatever. And that's the end. You can continue going because you have the opportunity to refer them to the mortgage. Who else? Like who else in your world then?
Open house people. I mean, just who else are you referring into your own mortgage to come up with almost double the number of mortgage closes? I mean, and we're taking refis out of that. I'm imagining there weren't too many of those recently.
Yeah, right? Basically none. Yeah, absolutely.
Where are they coming from?
As far as lead sort
for that, like the different lead pieces. So all of us, I think, on the call are like, I take my buyers that I'm about to take out and show houses, they go to my lender. But that's the extent for most people. So what are the other types of leads that you guys are taking over? And you're saying everything, but break it down for me. Like Chad said, open house. When it comes to an open house, like they're probably getting passed over. Absolutely. Right?
It's literally every single person. So like our attach rate on our buy side transactions is 96% for our mortgage team to work with them. So 96% of all of our buyers use mortgage with us. Okay. Right. So that's the attachment rate for that. Okay. For the additional sources, it's literally everybody.
Can I ask, is the other 6% cash, or is the other 6% they really have their own lender and stay with their own lender?
They're like new builds, where the builder owns the mortgage company and they have these crazy incentives that, you can't touch, that type of stuff. So they're losing money on one to make it up on the other. So that's really the only time that we don't get the deal. But the backside of that is we still get them pre-qualified. We just lose the deal because it's like, who's going to walk away from 30 grand, in free incentives and a free fridge, right? They're going to most likely take that deal, right? So as far as different lead sources, it's literally everywhere, or every single one of them. Open houses as they come in, right? All of our leads that come in through Brivity, right? Are all of our listings, right? Because one thing we try to think about is like how many of I think, Bob, you said this on a training a long time ago, or it was at one of the events, is what is the percentage of sellers that also, or what is the percentage of people in the US that own a home, right? It's like 60% or whatever that number is.
65.
So so whatever listing we take is probably going to be a buyer. So every listing we take, it's part of our listing process. As we're taking, who wouldn't ask that question? You want to sell your house. Most consumers, they need to sell their house, but they want to do something else. They want to get a bigger house. So they try to figure out the first part, right, of replacing the home, and then they have to sell. So we're trying to get that part too. But it's, in a simple form, it's literally every single source. Past clients, sphere of influence, events that we do, all that type of stuff, right? Events is a small portion, but yeah.
Do you have people on the team that are licensed, that have mortgage licenses and real estate licenses? Is it everybody on the team is in that scenario? Or is there a clear, it's like the lenders are licensed over here?
Lenders are lenders, agents are agents. Yeah. So, we've explored that idea and that kind of stuff. We can definitely do that, right, in that direction. But like the primary goal for the real estate agents is to be successful real estate agents. Primary goal for the loan officers are to be successful loan officers. So it is 100% separate.
When you get this thing going kind of at the level that or maybe even on the way to getting to where you're at, what were you looking for from the lending side of that? Like, and this is because you were kind of wearing both hats, right? But like, what if I'm listening to this, what should I expect from my lender in terms of supporting my business? Like, is there a financial element to that? Is it just be there and make sure you take great care of the people that I send over to you? Like, what does that expectation look like?
Honestly, the main thing is expectation. What is the expectation in the way of like, if I send you a lead, when are you going to call it? Well, like sometimes that I've seen, working with other teams and stuff like that, is they'll send a lead over to the lender, and if they don't call it in 3 minutes, they're like, they don't even call. On to the next lender, right? Lenders have lives too. Like lenders are people too, right? Just like you. Like we got to make sure we have a proper expectation. So if we're going to get into a relationship with a lender, what is the direction we're going to go with each lead? If I send you a lead without a note, what should we do? Like, what is the standard operation, right? Do you call it 3 times? Do you call it 4 times over 3 days? Like, what is your path? If we don't get a response, what does the lender do? The lender reaches back out and says, hey, I haven't been able to get a hold of Chad. Can you like send out another text, reintroduce us, give him a call, what's going on, that type of thing. So establish what the proper expectation is with working with a lender. And then how often do you guys meet to review the leads and the sources that you're working on, right? So what we work on is a weekly meeting. How many leads did we get last week? What is the status? Are we having trouble getting in touch with them? Let us preemptively attack that, right? Because if we just are throwing, things at the wall and hoping that it's going to stick and no one's watching it, like how are you going to know if you're being successful or not, right? So that's the main part.
Yeah, there becomes no accountability if we're not doing that, saying I gave you 55 leads last month and they're like, well, I got through to 1, right? And I don't even remember the other 54 when it comes to it. I want to go back in time because I want to while Bob and I are getting great information from you, I want to make sure the audience is getting right stuff.
Yeah.
And they're mostly, I'm believing, realtors. So if I did the math correctly, you said it was about 3 years into your real estate industry where you had this light bulb go on. So
Yep.
what was that trigger? I mean, 99.8% of real estate agents out there find a lender and then they just work with that lender until that lender pisses them off, and then they go find another lender, or
On to the
the
next.
market center office gets rid of that lender, or whatever it is.
Yep.
What made you say, wait a minute, I'm going to own both sides of this transaction here, and I'm going to build a mortgage piece to go with it so I have both?
I mean, honestly, no one else was doing it. No one who I can, because like the primary focus for most real estate agents is to convert the real estate transaction.
Yes.
So I found that the mortgage side, so even just sitting as a real estate agent, no one was talking about the mortgage. No, everybody was just saying, can I find you a house? Right? Oh, 3-bedroom, 2-bath. I mean, that's, everybody dives deep and goes through those details. But like, if I can help serve them by locating a lender that can help them in that situation, that creates brand loyalty, so to speak, right? And get that moving. So the reason why we started to adapt it is, why not? That was really the idea around it, is no one else was doing it. Why not us? Right. So let's go towards that. And then we were having great success because we were shooting more towards a mortgage qualification. Right. We don't ask questions we can't ask, obviously, because we're not licensed, but we can trigger it or that's a trigger term. Right. But if we get them moving over to the mortgage side, they're more likely to stick with us if we're asking good questions, not just the generic, what are you looking for and how?
What's the lesson the audience needs to take? If I'm sitting here and I'm attending this call, yep. I am getting off this call and I'm immediately figuring out, how do I partner with my lender at a different level, or what licensing do I need to get to literally go hire somebody to become a lender that now works with me for me in that situation? What's the warning? What's the red flag? What's the thing everybody needs to hear? Because it sounds easy, yet we know it's not.
Yeah. The biggest thing, what I would come from, like looking back, the things that have been most impactful for us has been the attention to detail for the accountability of the leads that we're sending. Right. So that would be the most important thing. Just send them a phone book. If you want to send them a bunch of leads, just give it here's a phone book. You call it, I'll call it. Like, that's a lead, I guess. But like, who are you sending? Like, what is the process for follow-up? What is the lender expected to do? Because typically on the lending side, it's a little bit less frequency of calls. You're going to call them as the real estate agent, try to get them on the phone. Once that happens, then it passes over to the lender, right? And you take care of that part, right? So that would be kind of a big part with it. But I think the most important part of it is working with the lender as make them part of your business. That's the most important part. You're a team. Act like one, right? You don't have to be official like us, but like act like a team. Like we didn't always do that.
Like it's a partnership, right? And I think that like none of us would just walk into a partnership and be like, here you go, here's a bunch of stuff, figure it out. Like it's.
Yeah, and they get mad when they don't do anything because you didn't give them any direction. Like, it's like, oh, yeah, they're terrible. It's like, well, you're a bad leader, right? You didn't tell them what to do. Yeah.
The thing I'm hearing from this, Bob, for me is, again, and it's my favorite word we talk about, it's accountability, right? And it's whether you go and you build your own organization within house the way Scott has, whether you go and you find the lender you've already been working with for months, weeks, years, whatever it is for those of you listening, whether you go find a new lender. When was the last time you sat down across a table from each other or on a Zoom and you literally went through every name and said, what's the status with this one and this one and this one? And agents, you probably have no clue what those names are because you just give it to the lender and forget the name, hoping the lender will then trigger it and give it back to you. Wouldn't you be surprised to find out that the lender ended up getting that person back a month later and forgot it was even you who gave them the referral and you weren't having that accountability and now they gave it off to someone else, right? It's all about accountability with that person. David put it into the chat box. He grabbed that quote you just said, right? You're a team, act like one.
Yep. You got it.
Love it.
Love it. Love it. Scott, Thanks for joining us, man. I know you're super busy. You've got probably people to get pre-qualified, people to show houses to, a listing to take. I would bet at some point there's a recruiting appointment on your calendar here in the next day or two. Thanks for taking the time today with us, man. Really appreciate you.
Nice talking with you both. We'll see you guys later.
All right. Bye, everybody. We'll see you next week. We'll bring you another thing that you should just be doing. Today, it's go make a better partnership with your lender. Thanks, Scott.